Last night, Jensen took a leap to go much deeper with physical AI, including making humanoid robots and taking autonomous driving to the next level. As Jensen said, quote, everything that moves from cars and trucks to factories and warehouses will be robotic and embodied by AI, end quote. To me, that sounds like the agentic economy, where we have digital agents that can do all sorts of things for us, and it's all NVIDIA. The world will never be the same if this happens, and after last night, I think it's happening much sooner than expected. That was the takeaway. Jensen talked about the possibly relevant AI PC, something that's been considered a bust. He mentioned several uses for Apple's Vision Pro for healthcare and gaming, another alleged bust.
Jim Cramer highlighted Nvidia CEO Jensen Huang's announcement of advancements in physical AI, including humanoid robots and autonomous systems, predicting a transformative, agentic economy where AI powers industries like vehicles and factories. Nvidia's partnerships, such as with Toyota, could drive demand for its chips, solidifying its role in this industrial revolution. Cramer noted Nvidia's stock volatility due to short-term traders, but saw its innovations as a sign of rapid progress. He also discussed Taiwan Semiconductor, a key Nvidia supplier, which posted record profits and strong AI-driven growth, underscoring its leadership in the semiconductor market despite potential U.S. trade restrictions. Both companies are central to the AI boom, with TSMC signaling strong sector growth and Nvidia pioneering new applications that could reshape industries sooner than anticipated.
Plus, there are all new clients like Toyota, that may want to build out a network using a supercomputer brain in one location and then a brain on board. I know that just sounds like a press release, but if Toyota, a well-capitalized company, decides to build out a Tesla-like autonomous driving system, it's going to have to buy hundreds of thousands of NVIDIA chips. That's good for business. Very additive. Now, there are always people, plenty of people actually, who own NVIDIA for the long term, like the Trust does. They should be gratified by all these very important announcements. But there's also a huge group of people who own NVIDIA because it goes up, often by a lot. And the stock went nuts going into and immediately after Jensen's speech. These people, many of whom buy call options, not common stock, don't know enough about the company to stay in it when the stock starts selling off. I'm sure they didn't watch the keynote or read the blogs, and they're just in it because of the momentum. When the momentum turns, they turn too. Sell. To me, this is business as usual, people. While I may not know all the exciting specs that Jensen talked about, as I see it, he assured you that the new industrial revolution is alive and well and coming to you in a very short time. In my eyes, NVIDIA stock was brought down not by anything lacking in CES, but because there was too much hot money in the stock.
Today, we are looking at Taiwan Semiconductor, which I think is one of the most important names in the AI story. And today, with a 4.7% move to the upside, we've pulled back a bit from session highs here, but still making a nice move in spite of the overall market collectively being lower, especially as far as tech is concerned. But joining us now to talk more about these earnings and what the street liked now going forward is Caroline Woods, senior markets correspondent for the network. So Caroline, I've always said I thought this was one of the most important names, and I think this earnings event has been hugely encouraging as far as its financials, but not really lifting. It's not been the rising tide that lifts all boats as we've known, but still a standout move today nonetheless.
A standout move, and it might not be lifting the overall market or Nvidia, actually a key customer, but it is bringing some other chip stocks along with it for the ride. So Taiwan Semiconductor up about 5% today after better than expected earnings, driven in large part to AI chip demand. Of course, that is a bright spot for the company. Also offered better than expected current quarter guidance, which is likely helping shares today as well. So this is the world's largest contract chip manufacturer. Mentioned Nvidia as a key customer, Apple also a customer as well. Profit rose 57% from a year earlier to a record high. In terms of EPS, that came in at $2.24. The expectation was for $2.16. Revenue rose 37% to $26.88 billion. The expectation was for more like $26.4 billion. Also on the high end of Taiwan Semiconductor's previous guidance, which was between $26.1 and $26.9 billion. Of course, we heard from them last week in terms of the revenue figure, though. Breaking it down by platform, high-performance computer, which includes AI chips, was the bright spot. Revenue there up 58% year over year. Smartphone up 25%, automotive up 4%. Also reported, that better than expected revenue guidance for the current quarter. So now forecasting revenue for the current quarter of between 25 billion and 25.8 billion. Wall Street was looking for more like $24.6 billion. So that's seen as good news as well. In terms of some of the commentary on the earnings call, the company said moving into the first quarter of 2025, we expect our business to be impacted by smartphone seasonality, partially offset by continued growth in AI-related demand. And then the CFO on the call said, we observed robust AI-related demand from our customers throughout 2024. Revenue from AI accelerator products accounted for close to a mid-teens percentage of total revenue in 2024. Even after more than tripling in 2024, we forecast our revenue from AI accelerator to double in 2025 as the strong surge in AI-related demand continues. So a lot of positive commentary around AI. Shares up about 5% right now, up 10% so far in 2025, and 110% over the past 1 year, only about 2.5% away from the highs. And if you take a look, I mentioned Nvidia lower today, but we're seeing some other strength in some of the other semiconductor names, Lam Research, Applied Materials, ASML, Broadcom, all higher today as well.
Doesn't seem like tariff concerns or some of the restrictions out of the Biden White House on advanced chip sales to China are really a big of a concern with TSMC. Was that your takeaway, that this AI strength and the fact that they're kind of the best in breed when it comes to this technology and building this stuff, that there isn't really a huge risk factor to some of those other things that we keep reading about?
Well, I mean, I would say not without headwinds, because, of course, there are those U.S. restrictions on advanced semiconductor shipments to China, and then President Biden could be imposing some more. Taiwan not on that list, but some of its customers, TSMC's customers, are on that list. And there's also obviously a lot of uncertainty around President-elect's Trump's trade policy. He's obviously talked about imposing tariffs. So there are some question marks there. In terms of some of the commentary we heard from TSMC in general, if you take a look, Reuters actually reported that the CEO of the company said the impact of U.S. controls on AI chips for China was minimal, as there's not that many customers of theirs in China. Also, interestingly enough, Reuters reporting that the CEO of Taiwan Semiconductor will not attend Trump's inauguration, because they say that their philosophy is to keep a low profile. So quite a bit different. We've seen other tech executives kind of cozying up to President Trump, donating to the inauguration. It seems like to kind of better their relationships. Doesn't seem like that's going to be the case with Taiwan Semiconductor. But from the commentary that I have seen reported, I don't think that it seems like it's a huge concern of theirs right now, but it's certainly a question mark, especially heading into the new administration. And, of course, if you take a look at the Wall Street community, despite the fact that it has seen this impressive run higher, and as I said, only 2.5% away from the all-time highs, 94% of analysts still rate this name as a buy, the other 6% in the hold camp. The median price target is $239, though, so only about 10% upside from current levels, which is still, an impressive run higher. But considering it's already done that in January, we'll see if there's any adjustments to price targets and whatnot. So certainly some question marks, some potential headwinds. They talked about seasonality in terms of smartphone AI, obviously not the only segment, but when it comes to that AI demand, very much making the case for continued strong demand this year and even beyond.
Yeah, and I totally agree with you, because I think it was difficult to find something not to like within this report. I mean, if we were lower today in shares, I would have been just so lost, because as far as like their revenue mix, even I think has become more compelling. Like they're seeing the more and more growth substantially in the high performance computing, but also that makes up more of their revenue now. So I think a well-managed company, definitely focused on what's been doing well. But it's just so surprising to me that I not to bring Nvidia into the conversation, but I mean, this is one of the greatest reads on, I think, the health of so many of these other names, like Qualcomm's chipsets, Apple's iPhones, Nvidia is another one, but Nvidia is still lower today. So what gives in a sea of green and some of these semi names? Actually, Nvidia is a standout here, Caroline.
Well, there are those kind of question marks too about the additional export controls from President Biden before he actually leaves office. Jensen Huang has actually called them unprecedented and misguided. So there is that kind of cloud of uncertainty overhanging potentially the stock. I mean, I think too with Nvidia, it's obviously had its hasn't been a standout performer in 2025, but if you take a look, it's only about 12% away from the highs and still up 140% over the past 1 year. So, can't rule it out just quite yet, but yeah, certainly not a beneficiary of the strength that we're seeing in TSMC today.
Nvidia CEO Jensen Huang revealed major advancements in physical AI, including humanoid robots and autonomous systems, signaling a fast-approaching agentic economy. With partnerships like Toyota, Nvidia's innovations are poised to transform industries, though recent stock volatility reflects speculative trading rather than long-term fundamentals. Meanwhile, TSMC reported record earnings fueled by AI chip demand and remains resilient despite geopolitical trade restrictions. Its leadership in high-performance computing underscores the growing global reliance on AI technology, making it a critical player in this rapidly evolving landscape. How soon do you think AI-driven robotics will become mainstream in industries? What impact could trade restrictions have on the global AI chip supply chain?